Hey everybody, Damien here, and today we are going to be talking about reverse mortgages. What are they? Who is a reverse mortgage good for? What are the pros and cons? And of course, the terms you really need to consider before getting a reverse mortgage. I'm going to explain what these are in a simple language, the same way I would explain it to clients. And yeah, by the end of this video, you will have a much stronger understanding of what a reverse mortgage is and, is it good for you or somebody you care about? And the reason why I wanted to make this video was just over the years, I've met people that have them, and I've also met people where the idea of a reverse mortgage failed them. And, at the end of the day, we want to prevent that. So I figured let's get this education out there and prevent that from happening in the future. So let's jump into it. What is a reverse mortgage? Well, a reverse mortgage, simply put, lets homeowners ages 55 plus simply take out some of the equity from their home and get it as cash. They don't have to sell their home and they don't have to make monthly payments. That's a reverse mortgage at its most basic level. Think of it like borrowing against the value of your home. And instead of you paying the bank pays you every month. You still live in the home, you still own the home, and you don't pay back the loan until you sell or pass away or have some other means of paying back the loan. And there are typically three ways in which money is paid out with a reverse mortgage. There's the lump sum, there's scheduled monthly payments, and there's cash when needed. For the lump sum, people might use this for either paying off an existing mortgage, doing renovations in the home, or to help other unexpected costs that may come up. For scheduled monthly payments, this works like income. You get a set amount for the duration of your term, and this just helps you cover the cost of your month-to-month expenses. And lastly, for the as needed, you may only withdraw this, when you need the money, and this is a great option for people because it does keep the interest you pay back low. And while we're on the topic of interest, let's touch base on that because a lot of people are surprised by this. They're thinking, wait, there's interest on this money? And yes, since you're not paying the bank back monthly, there is interest on the money you borrow from the bank. And typically, these interest rates are higher than what you would see on a normal five-year mortgage. And if you could take a fixed or you could take a variable, and the variable is usually going to be prime plus 1.5%. So in this example, the interest does get added to your balance and it compounds, which means the amount you owe grows over time. And this is the part that I think gets people into trouble, is when they lose track of this or don't understand how quickly it will compound over time. So let's say you borrowed $100,000 at 7%. Well, after a year's time, you'd owe $107,000 without making any monthly payments. And this is why it's important to use these carefully. So how much can you actually take out? Well, most lenders will typically lend out up to 55% of the home's value, but there are some caveats. Typically, older homeowners do qualify for more, and there are some other factors as well, such as the age of the person, the home's value, location, the type of home, as well as current interest rates. Somebody who's 55, let's say, may qualify for 20 to 30% of their home's value, while somebody who's, let's say, 70 plus may qualify for up to 55% or more. And of course, there are some rules that come with these reverse mortgages. So let's touch on some of those. For starters, you got to be 55 plus. And if two people own the home, both of them have to be 55 plus. It must also be your primary residence, so you can't move away or rent the home without approval. Also, you need to keep up on all the basic maintenance, and this means your property taxes need to stay up to date. You got to have insurance and, like I mentioned, basic maintenance, so you got to keep the home well maintained. You do retain full ownership of the home. Just because you have a reverse mortgage does not mean the bank owns the home. This is important. Also, the loan gets repaid, like I mentioned earlier, when you move, you pass away, or sell the home. Lastly is the no negative equity guarantee. This means that you will never owe more than the value of your home. So even if the market crashes, in the end, you are protected. And let's talk about the pros of a reverse mortgage. The biggest benefit is no monthly payments. You get the money, no monthly repayment required at all. The next one is this money is tax-free, and that can help you stretch your retirement income quite a bit. The next one is you don't have to move or downsize. You get to stay right where you are for as long as you want. And then there's flexible access. You can get a lump sum payment, you can get monthly payments, or withdraw cash as needed. And lastly, there is the consumer protection. They only let you borrow up to a certain amount of the home's value, thus ensuring that you will never owe more than the home is worth when it's sold. All right, and let's talk about the cons. And the first one we're going to go with is interest builds up. Because you're not making monthly payments to pay this loan back, that interest is going to build up, and in the long run, it's going to eat away at more of that equity that you have in the home. This also means that there's going to be less equity in the home. So if you have beneficiaries, there will be less of that to go around once the home is sold. There's also generally a higher setup cost for a reverse mortgage, whether that's higher interest rates, mortgage setup fees, other legal fees. This does add up, and it costs more to get one of these than it does a traditional mortgage. Reverse mortgages also aren't ideal for people that are planning to move soon. These typically work better for somebody who's going to be having one long term. So if you're planning on downsizing or making a move in the next few years, it's probably not worth it for somebody to look at one of these. Who is a reverse mortgage good for? Well, typically you're going to see this work really well for people that are house rich but cash poor. And what I mean by this is you have a ton of equity built up in the home, but let's say you're having some trouble covering your month-to-month expenses. It can be useful in helping cover medical expenses, living expenses, renovations you want to do in the home, or maybe you have adult children and you want to help them with a down payment or get into a home of their own, but you also want to stay in the home you love. Reverse mortgages aren't good or bad. At the end of the day, they are just tools. And like any tool, if it's used properly, you can do some pretty great things with it. But on the other hand, if it is misused or managed improperly, well, the ramifications can be pretty terrible. So if you're thinking about a reverse mortgage or downsizing, I hope this video shed some light on that and helped you figure out if it makes sense for you. And as always, if you have any questions, let me know in the comments down below. I know there's probably going to be a couple of people that are going to tell me reverse mortgages destroy lives. And once again, that's a prime example of one that is not used properly. Anyways, thanks for watching. And as always, I'll see you in the next one.